All right, guys. So welcome to another video from True North Trading. I'm going to break down the GBP versus the USD. But first of all, I want to introduce myself. My name is Danelle. You might have heard Corey mention me before. I'm the other face behind True North. So, we've had a lot of great content over the past few weeks uploaded to our Instagram and our YouTube by Corey. And I just want to take the time to say thanks to, the people that have interacted with us through our Instagram and our YouTube channel, the people that have supported us and watched our videos. And I do hope they've been useful to you and sort of helped you see the market from maybe a little bit of a different perspective. So we're just going to go in and break this GBP USD down. So first of all, I want to start off just by talking about these levels. You can see the monthly support, the daily and the weekly levels. I'm not going to go into too much detail about how to draw these in, but you can see just from this little bit of the section of the chart we can see here, these levels are respected quite well. And you might notice that the sort of integer numbers and round numbers, that's because these institutional traders love these numbers, and the market and price loves to respect these levels from time to time. Not all the time, but the vast majority of the time they do like to respect these levels. So they're just on there really as a guideline. They're not really necessarily targets per se, but we can see how price reacts around these levels, and it's just for us to bear these areas in mind. So if I go into my trend lines here, you can see I've got three trend lines. I've got sort of a more long-term trend line. So if I zoom out, still on the daily, you can see massive downtrend since April 2018, massive downtrend. So there's my long-term trend line. We've got sort of an outer trend line and an inner trend line. So we know that overall, the directional bias of the pound versus the dollar is to the downside. Been very, very bearish for a long time now. But if I do go down to the 4 hour first, you can see here that since mid-August, we have been in a little bit of an uptrend, which is actually quite surprising, seeing as though Brexit is looming. But this is the reason that my directional bias is in line with the way the market's going. So I do think that in the next 2 weeks, the pound is going to tank and break this 1.20 level, which if I just zoom out onto the monthly, you can see that this level here, the 1.20, let me zoom in a little bit here. Price has only ever broken it once, and it's actually just retested it, tested off of it. It's never actually broken and had a monthly close. It probably will go down to the daily and stuff like that. You will see some candles below here, but it is a key area. If price breaks below here and has a strong close and a strong move to the downside, especially over the next month or so, we will see the pound continue to fall. And it's not just sort of technical reasons that I think this is going to happen. It's also fundamental reasons. Those of you guys that aren't really in tune with sort of the UK Parliament and the UK economy at the minute, Brexit is looming, and the Queen yesterday, the Queen of England, so on the 28th, the Queen of England basically agreed to suspend Parliament from early September up until just a few days before the Brexit deadline. And you can see how the market priced that in with this big bearish, big red candle here, a big massive drop of about 100 pips, 120 pips. So quite a lot of fear in the market, a bit of a risk-off sentiment towards the Great British Pound. So it's both fundamental and technical reasons why I believe that we're going to see the pound drop even further. So what I'm going to do is I've got my trend lines, I've got my key levels, and what I'm really looking for is a Fibonacci retracement from this high down to this low and up into the 61.8 to the 78.6 region. I'm just going to extend that across so we've got the levels on our right. And the reason I think this is going to continue to fall after a little bit more of a push to the upside is a couple of reasons. So if I zoom out on the inner trend line, I know obviously in the short term we are in a little bit of an uptrend, but you can see prices being trapped and squeezed here. We've got two trend lines. We've got the counter trend line and we've got the inner trend line that are both meeting. And what I think is going to happen is we're going to have a third touch. We've had the third touch of the trend line already. I think we're going to make our way back up, fake out of the trend line, and then burst right back down. And the reason for that is we've got 1, 2, 3 touches here. If I zoom back into what we're looking at here, we've got sort of the swing high down to the swing low. We've got the impulse, and then we've got the correction move back up to this trend line. And we did obviously make our third touch and make our way down, but we've not really fulfilled that 61.8 level. Anywhere between sort of this region, the 78.6 to the 61.8, that's where I'd be looking for my entry. Now, what I'm expecting price to do is I'm expecting it, as I say, to move into this zone and move down. I just want to talk about sort of direction that the market's in at the minute. We've got this micro uptrend here, this counter trend line, and we know that it's an uptrend because we've got you know, higher highs, higher lows, higher highs up here, higher lows. We've got higher highs, and what's actually happened is we've failed to make a higher low. So you would assume that, you know, we've got this nice third touch, we're on our way down. All this is obviously analysis. It doesn't mean that, you know, I'm definitely 100% going to be right, but this is just the way that I'm seeing the market. So we've failed to make, you know, we've made a couple of higher highs, and we've actually created a lower low here. And you can see the market's kind of stalling at this level. Now, if I just draw a horizontal ray across here, you can actually see that this is quite a significant sort of support and resistance region. So what I'd be looking for, as I say, is price to move back up into this region, the highlighted region that I've got there. So if I just get my brush tool. So from this level, I'm looking for price to sort of move up. I'm looking for it to break this trend line up to around the 61.8. Then I'm going to look for price action confirmation back down to the downside. And I'd be looking to ride this most likely all the way down to the monthly level 1.20. Now, the reason that I think that it's going to drop back down is because if we just look here, this is in early September. So, you know, I'm expecting at some point in early September, around the time that Parliament actually shuts down, we're going to see a lot of uncertainty towards Brexit. And I think the chances of a no deal are going to increase. So not only will we have potential technical reasons on our side, we'll also have strong fundamental reasoning for price to move back to the downside. Now, one thing I want to talk about is how price likes to fake out of these trend lines. So to be a successful trader, and this is something that me and Corey have only really learned recently, it's about, in a roundabout way, it's about doing the opposite to what the masses do. So it doesn't mean everything you think you should do the opposite. It means you have to think outside of the box a little bit. So a lot of people here would have been getting into short trades based off the third touch of this trend line. But we're stalling around this level here. So, you know, if price starts to come back up and breaks out of this trend line, people will be thinking, oh, you know, the third touch, it wasn't significant. And with this being an inner trend line as well, people might be looking for price to even come back up to this outer trend line, you know, and make it move all the way back up there. There's a lot of different things that could happen. But what I'm expecting is for price to fake, what we call fake out of the trend line, catch people on the wrong side of the market, get people going long, and then price action confirmation will occur, either at evening star, tweezer tops, sort of a bearish engulfing. We'll look for these signs on the 30-minute, 1 hour, 2 hour, and 4 hour time frame. And I feel like we're going to see this shoot all the way back down to here. Now, let's just say everything, you know, all the market plays out in our favor. The trade looks good to enter. And let's just say we enter from around this level. I don't really expect price to break much higher than here. So let's say we enter from here, we ride it all the way down. You're looking at about 300 pips back down to this monthly level. You're looking at just over 300 pips. So that's what I'm expecting the market to do over the next few weeks. Like I said, there's a few things that will make this trade invalid. If price just, you know, continues to break to the downside, and we don't see the push back up that we're looking for. If price does push up out of this trend line and continues all the way up, sort of breaks this high, the 100% level, then the trade is most definitely invalid from then. Even if it breaks to 78.6, I'd be a bit sketchy about entering. But what I'll do is I'll keep you guys updated. I hope you found this video useful, and I'll see you in the next one.